All right, let's dive in. Today we're talking about a massive shift that's happening in our financial world. And it's all about this, tokenized cash. We're going to break down how the one thing we all have, cash, is about to get a seriously powerful upgrade. And wow, this quote really hits the nail on the head, doesn't it? For way too long, the cash we keep on the sidelines, for emergencies or big opportunities, has just been, well, lazy money. It earns practically nothing, while inflation just nibbles away at it. The idea that your cash could be working for you 24/7, earning a real return, and be ready to spend in an instant, that's not just a small tweak, it's a complete game changer for how we think about money.
Okay, so let's kick things off with a problem I think we all feel in our gut. The lazy cash problem. You've got money sitting in the bank and you just know it's not pulling its weight. In fact, it's actually losing a race it doesn't even know it's in.
0.01%. I mean, seriously, that's what a lot of the big banks will give you. When inflation is humming along, that's not just a tiny return. It's a guaranteed loss. Every single day that your safe money sits there, it can buy a little bit less. It's like a leaky bucket, and you're just watching it drip away.
Now, for years and years, the smart answer for anyone who wanted to do a little better than that was a money market fund. But here's the thing. That solution was built for an analog world, a 9-to-5 world of phone calls and fax machines, and frankly, it's really starting to feel like a dinosaur.
So what even is a money market fund? Just think of it like a giant, professionally managed pool of cash. It takes everyone's money and invests it in super safe, short-term stuff like U.S. Treasury bills. The whole point is to keep your principal safe, that's the famous don't break the buck rule, while earning you a bit more interest than a regular savings account. It's kind of the old school way to make your cash a little less lazy.
This quote just nails its main job. The sources call it a parking lot for money, and that's the perfect analogy. It's the waiting room of the financial world. You sell your stocks, and the cash goes to the money market fund to wait. You're ready to buy something else, you pull it out. The whole system is built around this very black and white, you're either in the market or you're out kind of logic, and it's all tied to the tick-tock of the stock market's opening bell.
But here's the kicker, and this is where it gets so frustrating in today's world. That process is just painfully slow. Let's say you spot a huge opportunity on a Friday night. To get your money out of that safe fund, you put in an order, but nothing happens. It just sits there until Monday morning. Then you have to wait for it to settle, which might not be until Tuesday. By the time that money actually hits your bank account, ready to go, it could be Wednesday. And that Friday night opportunity, yeah, it's long gone.
And that clunky, slow, painful system, that's exactly what's getting blown up right now. The fix isn't just a slightly faster fund. No, it's a complete rebuild of the underlying financial plumbing, and it's all part of this huge movement called the 2026 tokenization wave.
Okay, so what in the world is RWA tokenization? It sounds complicated, but the idea is actually super simple. You take a totally normal, reliable asset, like a U.S. Treasury bill that's earning a nice steady yield, and you create a digital claim check for it. That claim check is a token, and it lives on a blockchain. It's basically your digital proof that you own that T-bill. It's like putting a digital wrapper around a bar of gold so you can send it to anyone, anywhere, instantly without needing an armored truck.
And look, if you're sitting there thinking, oh, this is just some niche crypto thing, you got to check this out. The biggest names building this new system aren't some scrappy startups in a garage. We're talking about the titans of finance, BlackRock, JP Morgan. These guys are all in, creating funds like BlackRock's BUIDL fund to do exactly this. This isn't a trend traditional finance is afraid of. They're the ones leading the charge.
And we're not talking about small potatoes here. The scale is just wow. Projections are showing that we're going to see over $35 billion of these assets tokenized and living on various blockchains by 2026. This has moved way beyond an experiment. It's a full-blown migration of real financial value onto a new, way more efficient set of rails.
Okay, so you might be wondering, what makes a tokenized T-bill so much more powerful than a classic money market fund? Well, it all boils down to one absolutely game-changing piece of technology: instant settlement.
I mean, just look at this comparison. It tells the whole story. The old way of doing things, wire transfers, T+1 settlement, it's a relic. It takes days, it only works when the bank says it's okay, and it involves this long, complicated chain of other banks in the middle, each adding time and cost. The new school? We're talking seconds, not days, seconds. And it works all day, every day, weekends, holidays, you name it. It's direct, it's transparent. This isn't just a little bit better, it's a completely different universe of speed and efficiency.
The secret sauce that makes all this instant magic happen is something called atomic settlement. The best way to think about it is like a perfectly secure swap. The exchange of your token for, say, another asset happens all at once, in a single, unbreakable operation. It's like a digital vending machine. The moment you put your money in, the snack comes out. It's all one event. There's no scary in-between moment where you've sent your asset but are still waiting for theirs. If any part of the deal can't happen, the whole thing just rewinds like it never took place. This is huge because it completely vaporizes counterparty risk, that fear that the other person won't follow through.
All right, so let's pause. We've got this amazing thing, right? It earns a high yield, it's backed by the US government, it's managed by giants like BlackRock, and it settles in the blink of an eye. It sounds perfect, almost too perfect. And that's because we need to talk about the brutal truth of this brand new world. And that's the question you should always be asking yourself when you hear about some incredible financial innovation. What's the trade-off here? What new risk am I being asked to accept? Because trust me, there's always a catch. And here's the catch. In big, bold, flashing letters, the source material couldn't be clearer on this. All those safety nets you take for granted in the regular financial world, they just don't exist here. There's no FDIC insurance. There's no SIPC protection. If your bank goes under, the government steps in to protect you. In this new world, there's nobody to call for help.
This is a massive mental shift you have to make. You're going from being a customer who has all these built-in protections to being a sovereign individual. Now, that gives you incredible freedom and control over your money, which is amazing, but that means, and this is huge, you take on 100% of the responsibility for keeping it safe. You are the bank manager, the head of security, and the guy who knows the combination to the vault. It's all on you.
And believe me, these aren't your grandpa's financial risks. We're talking about a whole new world of danger. First, there's smart contract risk. The computer code that makes all this work can have a bug, a tiny flaw that a hacker can exploit. And it happens. Our sources point to a crazy real-world case. The Balancer protocol lost $128 million because of a code vulnerability. Then, the whole platform could get hacked. And maybe the scariest one of all is personal error. If you lose your private key, your seed phrase, basically the super password to your digital vault, your money is gone. And not like call customer service gone, it's gone forever. There is no forgot password button on the blockchain.
And that all leads us back to the million-dollar question, or maybe the 5% yield question. Is it worth it? The promise of earning a solid 5% yield on cash that you can move in seconds is so powerful. But it comes with a completely new type of risk, a technological risk, that could lead to you losing everything. There's no single right answer here. It really comes down to your own personal tolerance for risk and how comfortable you are with the technology. It's the central trade-off of this new financial revolution, and it's something we're all going to have to think about.